What if you had a $500,000 grant alternative with 0% interest and startup friendly funding as well as non-startup in a combination for max funding? Hi, welcome in. This is Michael with Viral Funding Solutions. I'm a business funding expert, also a business loan broker expert. This is another way of saying that I know how to connect you with the best lenders and underwriters. I know how to pre-underwrite / underwrite files. I look at bank statements every single day, tax returns, P&L, balance sheets. I get a lot of fulfillment from that because I'm an introvert. I'm more cerebral, analytical. I'm a Libra, if that says anything. I'm very loyal. You don't have to worry about that. I'm well balanced, the intellectual cerebral type, as I just mentioned. And so in this video, I want to get into this grant alternative many people are jumping on top of right now. But before I do, I released a video somewhat similar to this, but an up to 150, if not 250,000 grant alternative video that I'll link you to down below. And I'll combine a little bit about what I mentioned in that one in this one on top of another type of funding. So before I get into what these combination of fundings are, because there are a couple of them, and this is going to fall on the creative credit based side. It's very lucrative. I've done this for myself and many others, accumulated over 100, 200,000 and above in this and what I still have. And so I'll show you a way to do it more effectively so you're not tripping up, making mistakes after mistakes and trying to just apply anywhere and everywhere, just trying to throw out a grant proposal, a business plan. It's not done correctly. And even if it were, you just are unsure or how they're going to look at it. And let me address first with grants, it can be difficult to attain. For one, you may not get the most. You might just try to get the most to apply to different ones, and you probably get at most up to 50,000, up to 75,000, and that can be a little bit harder to do unless a second time around. And it can pose a bit of difficulty because it's competition. It's competitive in that landscape. And even if it's been open now more than ever because of what's happening in the current economy with the banks, a lot of businesses actually going backwards in cash flow, profitability, a lot of people sustaining and a lot of people going into bankruptcy, defaults. There's so many problems that go on with expenses right now. It is crazy. And I've helped out a lot of clients. I do this every single day, from anything in the startup to the non-startup, SBA, everything in between. I help out people improve their profitability, their cash flow. In many segments of cash flow, there are their EBITDA, increasing their reputation, their growth and expansion, finding new ways to take control of the situation, to mitigate those risks and renegotiate contracts and a few other varieties. And in case you didn't know this, I have a digital marketing business, I began there with a digital marketing agency, lead generation business. I have one in the health affiliate marketing space with vitamins and supplements that I've done quite a bit of, an ergonomic desk chair and many others, the seat cushions, one under me, one behind me, and many other products that I've helped out a lot of people with their back pain per se. And then I evolved over time. And then also other verticals in the affiliate space. I did a hybrid e-commerce with my health one. And then I went back into the whole blog and creating a few things there. Other verticals, this has been my primary focus as an expert in this space. So I know what I'm doing, and I'll show you a few things here in a second. But all information down below in the description. If you're asking, how do I get in contact? There will be a questionnaire form. Please fill that out and thoroughly as much as you can. I then take the time to pre-screen. In other words, I analyze as a pre-underwriter / underwriter's point of view. I can look at that very, very well, and I know what to look for, even without the documents already given. So that'll be in the description. Please fill that out, and I will get back to you in time. For those of you who have already, I greatly appreciate you. I'm thankful of. And even if you haven't, I'm the same way. And if I haven't gone back to you, I've been quite busy and flooded. Just before this live, I actually was doing documentation research and calculating and looking at banks. I got to get back to that after this is done. So I only have so much time in the day to do things. But back to this. Aside from that, I've been where you are. I know how difficult it can be just to go through grant opportunity after grant opportunities. You're trying to figure it out on your own and thinking, well, what is an alternative? Or what can I do in the meantime, at least to get more funding and even max funding in a combination of things? And one way to do this is by, let me put here 3 times to 5 times the limit. And that is through credit lines, through credit cards on the business side, on the personal side, but more so on the business credit side. Why business credit? If you're asking, what is this? How does it work? without going too deep into this, there's revolving credit and then 30 accounts and then 45s and then 60s and then 90s, et cetera, even lower than that. And with revolving credit, it can roll over to the next month without you having to pay down that complete or make that huge lump sum payment at the end of the month, as commonly known as an installment loan. So with revolving credit, we can look at what's on the personal side and say, okay, what do you have currently? What major bank card trade lines of what limit do you have? How many in total do you have? At what limits there? If we added them all together, how seasoned is it? Is it over a year? Is it seasoned over 2 years? If you have a mortgage, for how long have you had that mortgage? There are a few situations where we can look at and say, well, you have this on your credit side personally. Do we continue to maximize those current limits and ask for an increase? Or do we look at getting a new card if we had to? Do we look at then moving that into business credit and looking at business credit cards? Because there are those situations as well. And so I've done this and I've amounted to quite a bit over multiple businesses. And I know the difficulties you must be going through if you are a startup. So very quickly on this, I know I shared with you just a little bit about myself, and my business side of it. But again, I'm a very loyal person. I'm an introvert. I don't talk much. I actually do more, and I actually do the documentation, processing, application, that stuff. Unlike others here on YouTube, no offense to them. If they don't do this, none of it taken, please. I don't mean any offense to this. It's just I come from it from a different point of view where I know analytically I love looking at documents. So there's nothing better than having somebody by your side who can actually help you with all that and not just giving you a lot of hoorah out there or not just telling you and saying bad words, because I don't speak like that, and just trying to dram it down no matter if it's aggressive or not. And there's times for it. But I take a more calculated approach. And I think that's what's in your best interest. You want somebody who will take care of you at the end of the day. And I've been to school. I come from an academic background. I played a little bit of Division I soccer. I studied a little bit of sociology. I moved into chemical engineering for some time. I studied those classes. Chemistry, my favorite class till this day still, even though I'm not in college anymore. I thought I'd become a chemist at one point. I work well in a team. I work great individually. And so that, and then I made a big decision to then move into business because I had satisfied the requirements and certain other ones, not just prerequisites, but I wanted to start a business. So I eventually got into that. I eventually got into that world, took a big risk, and it has been paying off, which I'm very grateful for. It just didn't happen immediately. I've worked in construction, manufacturing. I did warehousing. I was rampaging in the construction manufacturing world. Like I was in the actual getting my hands dirty, working on a machine, pumping out tooling and dialing and die from this tooling that we were working with. And then also working with the chemicals. I like the chemical side too, because I got to understand the properties of compounds and all of that and how it mixes. I even did things on my own time with chemical equations. I know I'm kind of a geek when it comes to that, or nerding out. But I did quite a bit of that. And then I moved into the blueprint room. I've done quite a few things. I then later on got into financial logistics with a huge contracting company servicing HP and P-South. It went down under before a transition. Then it went down under. 50 plus people relieved, budget costs, new transitions, and a few more things. And then I had to go back on unemployment benefits and food stamp cards. That was not a good feeling for me. Introvert me, like I couldn't even lock eyes with the person at the register paying with an EBT card or how I had to. And then just happily out of there. And I've always been a positive person, but and that I didn't even get a chance to even pay enough for the meals when we would go out to eat. I didn't even want to go do that normally like I would. And it just felt like a lot of guilt. And I didn't want to feel like that anymore to my family and have them think that I was a barrier at some point, even when it wasn't said. And it happens. And this was in my younger 20s, and we live and we learn. Not everything is linear, even for somebody like myself. So back to this. So 3 to 5 times the limit. And then we also have to see, because sometimes it is equal to, we just have to know what you have on your credit side. And if you are over leveraged, what do we need to work on? Like paying down a balance or multiple balances on how much revolving credit. But on the business side, this is a great addition because it is 0% interest, and moving your personal limits to your business side at 0%. Just imagine that. You're trying to figure out a way of your cash flow flowing correctly. It already isn't. You're like, on my personal side, I got it all over the place. Or you have it together, or at least to some point. And then later on, being able to move on some personal, debt over onto the business side. And then even over time, moving debt to certain cards over certain amounts and spreading it out. So you have minimal payments over a certain amount of cards, which is great, because this is a form of credit card stacking, and I'll get into the requirements in a second. And so this, let's say we want to add 4 to 5 cards. Where do we begin? Well, what do you already have? What don't you have? I will know that. I'm the expert in this myself, and or my team will go through this. And it depends on time and things I can and can't do at a point, since I have to do other things as well. But I look at it and we go, okay, this is where we can start. This is where we'll start with these applications. We're going to predict the range between this and this amount over 4 to 5 cards, over 3 to 4 cards. And this is going to be the best approach. What you don't want to start getting into with these 0% interest cards, and again, for 6 to 18, if not 6 to 24 months, no documentation, more so the stated revenue, projected revenue. And instead of asking for bank statements, tax returns, or any of that, it's truly no docs. So that's a great startup and non-startup solution. Of course, if you don't have what you need on your personal side, there's a side to this of rebuilding credit or starting out building credit and getting primary trade lines to then buying trade lines if we had to. But that's at another time for a different topic. I'll try to leave more material for that down below in the description. So there are different phases. You need to repair your credit to then get to that next step. So there are different levels to this that you can't just jump over, or you sometimes can if it's that quick, but you have to understand that. So let's say we do a couple of cards. We did a Bank of America, or to start with a Chase, and I have that relationship with them, been in with them for a long time, as well as others. But going to a Chase, let's say, an addition of 10 to 20,000. And we still have to look at a few things. Okay, Chase, 10 to 20,000, we did 15,000. Now we go to a Bank of America. Chase pulls from Experian, TransUnion from Bank of America normally. And then we look at the two. Okay, how much can we issue you there? Another 10,000 there. We added to the 15,000. Now you're sitting at 25K. Now we're gonna try to add 2 to 3 more cards. Let's go to a PNC Bank and then a Truist Bank after that. All right, let's do that. Or maybe it was a Key Bank before that, since normally they pull from Equifax. But do we want to go there immediately, even if you don't have to have a banking relationship with them? That's up to be discussed, and that's up in the air depending on what you have and what we need to do first to get you a higher amount. It's the point of it is to try to get the most amount that you can also leverage. If you have variable uses, fixed uses, of course, like a lot of us do in our businesses for inventory, paying down that inventory and those costs as you go, and having a low $200 to $300 a month payment, like even if it didn't like get paid down, you know you're keeping your costs low enough for that startup or that non-startup, and it lowers everything. And so a lot of this, you want to make sure you're using it for good debt, not bad debt. If you're using some bad debt, how can you rebound? Can you rebound quick enough? You don't want to start getting into this situation where you can't make the payments, you're late on your payments, you're getting into issues. Now you're going to have to get into defaults over time, dismissals, discharges, bankruptcies, I should say, more so on the personal side. It's not even on the business side yet. And if that were to happen, like there's so many problems that can arise from that. So that's one part of the equation. I can go into all the details, which I'll get into a little bit right now. But on the other side, where's the $500,000 coming from in total? So 150 on the business credit card side, if not 250 on that side, and then between 25 to about 300 or even up to 500,000 itself on the personal term / installment loan. So what this is, it's a term / installment loan, as the name implies, where you're getting a lump sum from your personal side that you can apply to your business. Not all of these are created equal, so you have to go to the right provider to get the most amount. And if you already have one that you've been using, then you will know about that more or less and how to apply those funds. But a term / installment loan comes in hand for many reasons. It could be that you didn't get approved for credit cards right now. You're not business credit ready, but you are personal loan ready. Your debt to income is low enough, and you have enough open revolving accounts, at least 2 or at least 5 primary trade lines. Every lender is different. I'll get into some of these qualifications in a second. But a term / installment loan, in addition, 150,000, 300,000 on the personal, or 350, 400,000 on the personal side, more or less. Even if it were just 50 to 100,000. More or less. You have to look at, okay, if I have this amount in funding, will my business generate X amount of revenue? You have to also look at, from that revenue, what is the return on investment completely? What are your gross profit margins? What will they then look like? What will your cash flow, operating cash flow, investment cash flow, financial cash flow, free cash flow then look like? So it's all about understanding what you can budget and what you cannot, understanding your variables, understanding what's fixed, understanding what is a variable cost, as in this fluctuates or this changes as inventory changes, as maybe even payroll changes at times. You can see that becoming more of a variable issue if that's the case. But how do you manage a lot of that? By understanding those uses of funds, understanding how to prepare about 6 to 12 months in advance for those things to happen. If you don't plan out enough, it can be a little hard, or you might just be able to get through that wave and you come out of that like all beat up, like hair all over the place, and just trying to figure it out. So it can be a little bit difficult on that point. But a personal term / installment loan, as I mentioned right here, that can be great. It can keep your interest rates low enough. I've seen approvals right now between 7% to 15%. And this isn't like the 0% interest business credit cards. With the 0%, as the name implies there, it's normally 0% to start with. And then it can be variable. It can be like 14.99% to about 26.99%. But it also depends on the credit card issuer. So you'll see that likely go up or even less than 14%. But it just depends. And using it as good debt, making sure you understand that and how it works. So the 7 to 15% there, 6% to about 28% or 18%, excuse me, I've seen though on also with the personal loans. Trying to keep it lower than 7% is hard, especially with everything else going on. I've seen 11%, 10% a lot of the times you'll see. But that's not a big issue. What you should take away from this video, if anything, aside from it, the rates are not the issue. When people come to me and go, what's the success fee? How much are you charging? Well, immediately out of the gates, if you're asking that question, I don't feel like, okay, I know this person has probably been searching, or they know something like this already, or they just don't have the right mindset about it. Somebody's been pre-programming them or educating them in a way they shouldn't have. But with a lot of this, it's not going to come down to a success fee or origination fee. It won't come down to the interest rate. The interest rate's a little, when people tell me the interest rate's a little high, the success, you know what it does tell me? If I ask a follow-up question to that, it'll tell me that it's not the actual fee. It's not the actual interest rates. Although the market is harder now, I get that, than it was before to borrow. It's not about that. It's your ability to be able to use this money correctly to generate enough of an ROI from it. It's 100 to 200, 150%, 50 to 100%. But what are you doing, and how are you using those funds, and where are you allocating it to, and what percentage? You have to know those numbers. Are they going to increase your revenue? Will they just decrease your revenue? Will they decrease your cash flow? You have to understand these things and the risk. So if you can't go to the bank directly, or if you try to and you don't get max funding, but over here you get expert funding at a little bit of a slightly higher interest, if any, and the rates and all that, that's not the issue. It's how you use those funds and what you allocate it to. And so you're just price gauging at a point. But when it comes to a lot of this, with like the term / installment loan, like the lump sum you can get, there's also a combination of a personal line of credit. There's personal credit cards. That's why creative credit-based financing is so popular. I've done it multiple times. And once you understand everything, how to separate your personal from your business and just focus on your business credit, right there, you're just never going to, I'm not going to say never because everybody's in a different situation, but getting loans, getting temporary short-term loans, getting into your HELOC, doing a lot of other things that you wouldn't have wanted to do, but yet you had to, is going to change forever. And I've seen it in myself. I've seen it in many others. And so before I get into any of the actual costs of the success fee, I'll get into it in a little bit here, but the actual credit, like what you need in terms of the requirements for the business credit side. And I actually have a form here that I want to use just as guidance. I don't actually need to look at this, but I'm going to be transparent and use it as a way that I don't miss any of my points that I need to look at. But like I said, again, I don't really even need to look at this stuff. And things in the market change, so you will always be kept up to date. But what you want to have is no more than 4 bank inquiries per bureau in the last 12 months. It doesn't include secured inquiries like auto loans and mortgages. And this is for the business credit card side, where we can do credit card stacking strategically. And with the credit, you want to have a 700 credit profile on all 3 consumer credit bureaus. It's not enough to say you have a 680, 700, and then a 700. How do we look at getting your 680 score to the 700 plus range, preferably somewhere closer to 720 in this market, 725, to help you get maximum approvals, because certain credit card issuers, certain banks are going to want a 720, if not a 725, like the Amexes, even though they can go lower than that. And I've seen lower than that in the 700, even less than that. But other ones would want like a key bank 720, if not 725, with no more than 3 hard pulls in the last 6 months, and have no late payments, no charge-offs, none of that. And you don't have to have an existing relationship with them. And they have multiple products, their line of credit, and then they have their also 0% interest that can happen with even just one pull with a lot of that. So that's a great solution. But when we're doing credit card stacking, 700 plus credit, if you have less than that, it's not to say you couldn't get a credit card. It's just you don't have optimized credit to, let's say, get you enough. I have a lot of scenarios where I've helped out people, and it's like they don't have a major bank card trade line of at least this amount, at least 2. If we ask for 1, this is the situation. Okay, but you don't have that. You're adding these in total, and that won't necessarily work, or it won't work in your interest to do that. So we need to look at bulking up your personal credit history first. We should add a few more primary trade lines or be an authorized user underneath somebody else. But the authorized user, when you try to get business credit cards, is not going to necessarily help you unless they have their own business or they're a part owner of your business that owns at least 10%. So that's another way to look at it and say you can piggy off of somebody else's. But if you don't piggy off somebody else's, is there somebody currently in your business that you can make part owner and the operating agreement, open that up, add them in, have that fulfilled, and then checked off there on that box, and then have them at least 10%. I would try to do at least 20%, but 10% if you're not trying to have them do that much, just let them sit there, whoever they are. There's different situations for a lot of that. And if you know of another business owner with better credit than you do, you can leverage that person that owns a business to try to help you get you these cards, and they're more than willing to help you do that without being an authorized user or any of that. And if you needed a credit partner at the end of the day who has that good credit score level range on all 3, preferably that, there's another thing I'm going to get into on the personal loans here in a second, then that's what's in your best interest to do. Then look at that. If they have property, do they have equity in that property, enough stake into that? Do they have liquidity, any kind of like cash on hand, anything that would be helpful for you to have more for what you need to do? So there are different services too, like commercial real estate, cash out refinances. There's investment real estate that you own from different properties, or one that can be enough that we can try to liquidate or pull out equity from, and then liquidation in terms of hard assets and converting that into cash and giving it away completely. That's a whole nother topic. But there's that. There's the liquidation here where we can withdraw the money out of these cards, and you can apply it for purchasing property and for other things. And even that right now in this market, for those of you who had a HELOC or took out a HELOC, home equity line of credit, last year in the beginning of the first few quarters, and even before that year, are in better position now and might understand more about what I'm getting into, especially on the real estate side, when it comes to using cards on top of a HELOC if you needed to, and to pay off other debt if you probably just used it for that or you had enough of it. So it'll be very helpful to use a combination of this if you needed to, or if you can only get one. And if none of it, use a credit partner, and that can be a friend or a family member, a business partner. When it comes to a friend or a family member that does not have a business, they're not a part owner of your business, then they're likely only going to qualify for a personal loan, personal line of credit, personal credit cards. So keep that in the back of your mind. No, so we went over the bank inquiries, no more than 4 bank inquiries per bureau in the last 12 months. Some of them, and it comes like with a personal loan too on that side. Normally they don't want more than 6 inquiries in the last 3 months. Other bureaus or other organizations, I should say, no more than 3 hard pulls in the last 6 months a lot of the time. So we're giving you a little bit of, in a way, breathing room, you could say, and multiple opportunities to try to make this work. And again, it does not include secured inquiries like auto loans and mortgages. That's a different type of a repayment. No more than 3 unsecured accounts, again, open in the past 12 months. It does not include secured inquiries like auto loans and mortgages. This meaning any new accounts. I have had to shut down today alone. I was looking through soft credit pulls. I had to pull that, and I had to say, we can't do this because you have too many unsecured, even secured, but too many of those unsecured accounts that have been open in the past 12 months. So here, let me kind of put this on paper here so you have it. 1 second. Let me zoom this in. So as you see on the screen there, I'm just adding that. And it does not include secured ones like auto loans and mortgages, so I won't put that part. But you see it here, no more than 3 unsecured accounts, and then no more than 4 bank inquiries. Sometimes the bank inquiries depending on the credit issuer, but I want to put that here so you have that on hand. So that's one part of it. You want to have under 40% utilization on each of the revolving accounts. So here, under 40% utilization on each revolving accounts, we can say that. So that's one part of the equation that I wanted to mention in there. No open unpaid collections or judgments. Of these, I'm not going to be listing here much. Let me move this over. So first of all, keep it underneath 40% on each of the revolving accounts, because this, again, is credit card stacking. We can't have one account that shows us 20% while another one is 40%, 60%, 70%. Like, that's going to be harder to do. We're going to ask you to pay down your balances. We're going to ask you to shift that. And I'll have that information to you in time because each person is different. No bankruptcies at all that are showing on your credit file. No exception, like none of it, completely removed. I've had to deal with a lot more bankruptcies recently than ever because, like I said, again, everything has gone up. Some industries have been affected more than others. And if you're already starting off without even a business yet in not a good position, that already doesn't look good. Nobody's going to want to issue you credit unless it's like bad credit cards, which that's for another time. I already created content on this. I'll try to link you to it down below. But excuse me, if you're trying to rebuild your credit and you're trying to go from bad credit to good credit, we may need to look at getting a secured credit card that then we can turn unsecured in time, and then get another card that's secured and unsecured at the same time, and try to do that together and get as much of an approval as you can initially. And then as you grow that relationship over and then you get into an unsecured, then you can get issued more credit over time, over 3, 6, 9 months. That would be very helpful. And then we can come back as you start building your credit file. And then as you start getting enough primary trade lines, and then you start going from bad credit to good credit. And if that has to take a form of credit repair in that time while you have these cards issued, perhaps even at just a low limit, that could be helpful. And it shows you're rebuilding that. You're making on-time payments. A lot of this is you have to rebuild that trust. You have to go back and you have to do it with another provider. And you have to know that not everybody's just going to be the same way when it comes to it. So no open unpaid collections or judgments. The bankruptcies, again, there at all. Chapter 7s, Chapter 13s, whether we're doing creative credit-based financing or we're doing revenue-backed, collateral-backed. And there are only 3 ways to get funding: credit, cash flow, collateral, or business trade credit. If you have none of these 3 or just one and you need to work on this as a startup and as a non-startup, there is the trade credit with vendor credit, store credit, retail, fleet, and a little bit more stuff that I've worked on myself. No open unpaid collections or judgments. That speaks for itself. Be careful with derogatories, having too many, even just one. No late payments in 2 years, no charged off accounts. The charged off accounts just, again, speaks for itself. So none of that. And then the no late payments in 2 years. This is for credit cards. Normally 2 years of no late payments. Anything after that, aged, normally you'll know if we can or can't do this, and I'll get that. And there's no exception to that. Missing a payment doesn't look good. If we're trying to go to a bigger bank, even with community credit unions, with regional banks, they're likely going to decline you a lot of the time. So be very cautious. You don't want to ruin any kind of relationship with an existing bank. And that's where I would turn to first. The number one thing to try to get most on the business credit side is to already have something on the personal side. That meaning, do you already have a personal credit card? Do you have one where, here, let me write this down so you guys have it. Do get a personal credit card or more. And what I mean by that, and there's a lot of things we can go through on this, but let's say I'm with Chase and I am with them. I've had a card. I have multiple cards on the personal side, higher limits now. Been like that for some time. But here, let's say you get a personal credit card or more. What would look better? To go into an existing relationship without any credit usage of any kind, or to go into it knowing that you've already established enough credit, that you have enough age history underneath that account, and with the relationship with them, you're depositing consistently into your accounts. It's better this way. So I would say, even if it's just a 5K primary card, or a 10K plus card, whether it's through Chase or others, like an Amex, it would be great to have at least 10K. They value that a lot more than others do. But if you have something at least on the personal credit side, what matters a lot is the age history, matters the usage, utilization, how often you're making your payments. Are you making them on time? How fast? So a lot of that helps. And then later on, if we had to do a limit increase on one of these before we do business credit cards to get you ready, can we do that and increase it by another 10 to 20,000 if we could? And then they get you 20,000. They probably jump that up now to 20,000, that you're ready for that. Or it's just 15,000. Then now we have a primary bank card that's 5K plus. We are actually at 20K now. And the better the more you have, the actual better it'll be. Not just have one card from one place, because we're factoring in getting you the highest amount. And while you have one card that you've been using, and depending on having more cards to use shows us that you're able to spread that credit out over multiple cards. So that's one part of the equation. I'll just cover that now. I'm going to go into the personal term / installment loan in a second. But before I do that, you do want to have a seasoned major bank card trade line with a $5,000 plus limit. That is what we're looking for. Let me move this over so you have that. Sometimes at least 2 open credit cards with 2+ years of history, and at least a $5,000 plus limit, as I said earlier. And this must be a primary card, not the whole authorized user card, not the authorized user accounts for qualification. You can use a credit partner there, but again, at least 2 open credit cards with 2+ years of history and at least a 5,000 plus limit. That's what more or less we want to look at. And so a lot of the times we want, again, this is another way for me to say this, a seasoned major bank card trade line, as I said, of a 5,000 plus limit, and must have a minimum of 2 open revolving accounts with at least 2 years of history or more. That right there has to satisfy that requirement. And the open revolving accounts and the credit score that you have makes up for the fact that if you don't have 5+ trade lines, that's another thing. And the 5+ trade lines are normally a big factor when it comes to getting the installment term / installment loan. So here's another thing. Again, must have a minimum of 2 open revolving accounts with at least 2 years of history or more. You can have 1 open revolving account if there is an aged mortgage with at least 2 years of history. So that's an exception where we drop from 2 revolving accounts to 1, and 1 open revolving account if there is an aged mortgage with at least 2 years of history. That makes up for it. Or 1 open revolving account again, but an aged entity over 2 years. Now we're factoring how much business time and experience do you have in business. And if you have had established business credit in that time in another way, from suppliers, from this trade credit level, that would definitely help maximize approval. So keep that in the back of your mind. That's a little bit. Now I'm going to transition quickly, and we're going to close up here for the personal loan, and then I'm going to go into some of the costs. So a lot of this, from what you're seeing, though, can take 3 to 5 weeks, 2 to 3 weeks to get. It's just the process of what it takes. And if you don't want to make those mistakes of having to do it all on your own, yes, there's ways for you to learn a lot of this on your own, but sometimes it changes. Other times you're unsure about internally, because I have those relationships with the banks internally and things that I've done for myself and or with my team. But here, the personal credit score on all 3 bureaus, normally for the personal loan, term installment loan, is normally a 680 plus. 670 would get you in the door potentially, but we'd have to do likely a fast track funding where we're going to work with your current personal credit card or credit cards to try to increase that limit. Look at the oldest aged account, look at your highest usage as well as highest limit or limits, and try to work our way in through those and try to request an increase, if not ask for another card maximum amount. But there's a few different situations. I'm not going to get into all that in this video. I can only cover so much. But others would look at just a primary 680 or 700 plus, usually Experian. FICO Experian 700 plus for the personal loan side. And again, this is a term installment that we could try to combine with the line of credit. Have no more than 4 bank inquiries, so similar to the credit card side, per bureau in the last 12 months. Or if you have one on FICO, Experian, no more than usually 6 in the last 3 months for a lot of the times. Does not include secured inquiries, again, like auto loans and mortgages. No more than 3 unsecured accounts open in the past 12 months. Again, getting too much new credit, too much recent activity, too many denials. Does not include, again, secured inquiries like auto loans and mortgages. Have under 40%, again, on utilization on each of the revolving accounts that will be looked at. No 60 here, 40 there, 40%. And another one where if it's just strictly Experian credit, they don't want no more than 35, no more than 30% in those cases. No bankruptcies at all, again, showing on your credit file. No open, unpaid collections or judgments. None of that. Be careful with the derogatories. Again, if you need to use a credit partner to assist you, you have pre-revenue or you have revenue, then there's the revenue-based side we can look at if it makes sense to do, because you still have been in collection. So even them, even with bad credit, it would be hard to get you approved, because if you show you can't make current debt obligations, or you're having a hard time, or it's taking you forever, or you just have too much of it, like you're getting over leveraged by us giving you more funding. Does that make sense? So no late payments in 1 year, as opposed to the credit card stacking. You don't want to have this in 1 year. The other one was 2 years. This one is 1 year. Have no charged off accounts, similar. And there's more that I can get into credit. I'm just covering a little bit of this. Have a seasoned major bank card trade line of at least 3,000 plus in a limit, as opposed to 5,000 on the credit card side. Must have a minimum of 1 open revolving account, as opposed to 2. But you want to have 1 open revolving account with at least 2 years of history or more. So we're not asking for entirely the home mortgage and this other part, but have a minimum of 1 open revolving account. That's it. With at least 2 years, though, of history or more. So some of you have 8 months over 3 cards, over 4 cards and accounts, and you just can't do that. You're already low limit here, not major, and then you don't have enough age history where we can try to maximize getting you enough. It doesn't show that you don't have the experience yet to handle that new and issued credit level. So if you haven't been able to do that, or you haven't been using it as frequently, what makes us think giving you new cards you'll be able to handle? Just because we give you new money doesn't mean, or more money doesn't mean you can handle that. So you have to be cautious of that. Now, that's that part. Let me cover the quick part on the expectations, on what to expect. So from the personal side, I've seen, like I said a little bit earlier, 7 to 15, 7 to 18%. And those can come in 1 to 5 years, if not 3, 5, or 7 years, sometimes 2, 5, or 7, somewhat of a similar format to an online bank term loan. And sometimes you can choose what amount of term you want. So it keeps your repayment low. If you probably have like a $400, $600 a month repayment, or a higher amount, and you're paying $1,200 to $1,500 back, as opposed to the alternative, if you had revenue and you were going to go get a cash advance, where now you're paying back $3,500, $4,500 on a daily, weekly remittance. Now, those could make sense if you have the right type of depositing frequency. And even if not, you have to look at how much do I deposit in a week? What do I deposit in a week, if anything? If it's not, when do I deposit? And then also think about the opportunity cost of not having those funds. If you had those funds, what would it do to your ROI? What would it do to getting an extra 3 to 4 customers that you really needed and to secure those contracts? What would that do? That would generate at least an additional $100,000 to $200,000 in the next 3 to 6 months, from where you were before generating $50,000, getting $100,000 to $200,000. Your ROI is already up there. You're increasing that ROI. You bridge the gap more. So you can see how this does not have anything to do with the rates being 25%, 30% in those cash advances. They're not like that bad at all if you use it correctly for fueling and doubling and tripling, quadrupling your revenue and doing a lot more, as opposed to taking it and just paying expenses after expenses all the time. You're just trying to be up above ground. It's been a year. You're in the same position you were last year. Like, you're not in business to just stay afloat. You're in business to help the people you need to help and serve the people you need to serve and put a smile on them, as well as help the economy in many ways, but also increase that revenue and do better with profitability and cash flow. It's not personal stuff. It's not personally taken. In the personal side, where there's so many variables and you're not generating X amount of revenue for Y amount of return. So those are the things and the stipulations you need to look at, as opposed to the rates. And I'm going to get into some of the costs here. So that's a little bit there. Let me see if I missed here. I want to make sure I didn't miss anything. So for the business credit side, I did want to address this. to get the best results. And there's more that we can go through. I can only cover so much in the time we have. For your existing revolving credit balances should be no more than 45%. I would say no more than 40%, keep it low. And that's 45% of your maximum limit or limits. Balances then can be paid down with our onboarding process and my onboarding process with my team. And if you needed to use a payday loan option or pay down loan option, I've had people do that where they go get a revenue-based advance or something similar to it and use this to pay down a Chase card of about $8,000 where they need to get it down to $1,700 at the very minimum, or they just need to pay it off completely. And if they would have had $5,000, they could have paid down from $8,000 to $5,000 to $3,000. Now where do they get the additional $2,000 or so to bridge the gap? And if they're generating revenue from the business and using that money a little bit, that would help them and be sufficient. And if you had extra aside, that would be very helpful. So a lot of this we can do with the soft pull. That is what we can initially look at. No bankruptcies less than 5 years old normally. And we will look as an exception at reports with bankruptcies if your score is above 700 and the bankruptcy has been discharged for over 5 years without any negatives since then. And then we'll need to know which banks were included in your bankruptcy. That's very important. But at the end of the day, the rule of thumb is, yeah, just don't have any bankruptcy showing up on your file. So no open unpaid collections or liens. If I didn't address this, any unsatisfied tax liens, judgments, or collections, they must be cleared first prior to any kind of an approval. Unsatisfied means basically they are unsettled or unnegotiated. I'm doing that with a lot of people right now. Exception though, you can have an open medical collections are sometimes acceptable if other variables are strong and it's a case-by-case basis. So there's a little bit of that. Now let's get into quickly the success fees and we'll close up here. The success fees, the origination fees, why is it so much? That's what your thought is to this, and I haven't even given you that. Again, maximum amount from the experts, and you're getting this at a much smoother, streamlined process as much as it can be, not with all of these stipulations and them not getting your business and not looking at it as accurately. And this is normally on the personal term / installment loan. Those sides of the equation on the personal side there normally tend to be between 10 to 15% or 9.9 to about 15%. 15%, it's very normal to see, and that's off the original amount funded. So that 100,000 off the 15,000, you would get off that $15,000 applied to. And so you think about it and go, well, that's a little bit, or I mean, excuse me, that's a little bit a lot, excuse me. And you go, well, how am I supposed to handle that? Well, first of all, what are your uses of funds? Well, I'm going to be paying $85,000 here to just pay all this expenses down, and I'm going to have a lot more payments now. That's why you're complaining, because you have a lot. Or if it was just even a little bit. But, excuse me, you need to look at the opportunity of using that money as growth, not as staying just afloat. So that's not a big issue. The issue is how you use those funds, and you're getting maximum help, maximum funding, whereas opposed you can go the opposite and only get issued a little bit, as opposed to here getting as max amount as you can. And then more and more over time, you have that in the door. And then on the business credit side, you normally see around 9.9% of a success fee up to the maximum flat fee there. But you can use those total credit lines and what you get issued there off that 9.9% of the total to pay that off. So it's not like the fee is the issue to get this done. It's how you use the funds. And if you did it yourself, would you be able to do it correctly as things change? And I'm the one looking at a lot of this on a regular day-to-day basis with a lot of people. So you look at it and go, convenience over doing it all myself. Yes, I can do this on myself. Sure, if you'd like to, you can go ahead and do that as well. But then there are other ways of trying to do this as best as you can without falling into the whole, well, I don't know. I went to go get an Equifax pull from KeyBank, and then I went to this community credit union. Oh, you're over leveraged. You have like 5-10 inquiries now. You could have saved those to use them correctly, and you missed payments. You got these other charge cards. Maybe you went to Amex, and now you're overextended. And then you're trying to get a card from them, but I wouldn't have started with them. I would have looked at them last, or if you could have started in the beginning, why would that be the case? And I would usually bundle that in with another product as soon as we go to them. But there are steps in the process to do this. I've only covered so much in this video. There's so much more. I've done it in other content on different requirements from different banks, top tier banks getting 50K to 250K, having less than 3 to 4 inquiries, having more 2 to 3, I would say, inquiries per bureau in the last 12 months or in the last 6 months does you a lot of good. no late payments, of course, and a lot of this other stuff that comes into view. Having an LLC, an entity, corporation, C Corp, S Corp helps if you're not okay, but it maximizes when you have this, having the business address, the right NICS code, and having everything set up at the fundamental level will really help you in maximizing those approvals. And that's what a lot of them look at. And they're going to search things and they're going to verify that you are who you say you are, your website, your social media presence, do a reverse lookup, phone lookup, and a lot of this, the business, to make sure it is there and you're in good standing and it's not something that just is fake. But I think that's everything that I wanted to cover in this video. Let me make sure I'm looking at some of my tabs. Yes, we don't have to go into that, but that's for another topic that I'm looking at here. Another thing to do is look at like in Amex, and I'm going to quickly just show you here. I won't get too into depth on the Amex credit cards and what they're looking for. I already created content on this in the past, but just look at this. They have quite a bit with their business platinum card, their gold card. I have these. The blue business cash card, a great one, especially if you already have a relationship with them and you have a personal card of at least 10K, I would say is best. 5K, that's helpful, and it's spread out over a couple of cards. That should be fine enough. But with a lot of this, if you have it in the door, your next pull could be a soft pull. So you don't have to worry about getting another hard pull issued. And here's the blue business cash card. That is great. And how you earn 2% on everyday eligible business purchases. It has done a lot of good for myself and my family. The thing you have to understand from a lot of this is the rewards, the travel rewards, the cashback incentives, and what that can do at the end of a year. Like take yourself on a vacation, reapply these funds, have extra cash flow, be able to input more than what you output. As in like, okay, too much money withdrawn at a certain period. I have a little bit more to do and some more wiggle room. But that's just a little bit I wanted to show you. I didn't want to go too into depth with these cards. That's not the purpose of this one video. But this is one that could be added on top of in the beginning. But normally a lot of the times we like to do it on the back end. So let me go over here. Hi, Joshua. How are you? I'll make note of that. And I did see things I want to double check that I went through, though. And I will write this down. And sometimes I don't get back as soon as I can. For those of you in here wondering, it's not because I'm avoiding. I'm just busy a lot of the time. So it's worth the wait, like I tell people. And it's nothing wrong when you have to wait a little bit just to get a response from me. There's nothing wrong with that. And so here, I want to end this video by showing you my questionnaire form in case you haven't and you're questioning what I'm going on about. So here it'll look like this more or less. There are just some of the results there that I've generated. I have many more since then, of course, but I just wanted to show you a handful. You can learn a little bit more about myself there. And then up here, you can select from one of these two. It may look different over time when you look at it, but since I'm a non-startup, I select that. If you're a startup, you'll select the other one. Get the funding your business needs fast. And there's just a little bit of details. Please read through that. It's very important. This form can be done in less than a minute. I know it's a little bit lengthy, but not really. When you go through it, you can speed through it. But make sure you're trying to be as accurate and take your time with it, because sometimes some things get missed in the fields. And I go, that's extra energy and time I have to take to make sure that they are that much time in business, or it is this type of business. Like, you want to make sure you have what I need to. And I still go look for the business just to give you some, some credit. And I give you some love, show those Facebook posts some love, the likes when I get a chance to, and a lot of this stuff. So you see that there. This will help me understand more of what needs to get done. And it could look like that more or less. And then there'll be more content on the thank you page that you can check out. So that'll cover everything. I hope you got a great amount of value from this in the time that we have. Of course, there's a little bit more on these data points and these parts of the process with business credits, card stacking, business credit building away from your personal side. If you had to get personal credit cards, what did we need to do there? Did we do a combination of that? A personal term / installment loan to try to get you the most amount possible instead of waiting about 2 to 3 years down the road. And can you use a credit partner instead? So there are different situations to max up at that 500, if not more than 500,000 from a combination of personal and business. If it's not just personal, then it's probably just business and you build that over time, or it's just personal strictly, or we do revenue-based funding on top of that, or a collateral-backed solution. So there are different services for everybody for different uses. And then there's other ways out there to add a business line of credit, a true one, but it's hard in this market to get if you're not ready for that yet. The credit cards would be the way to go if you could get that. If you couldn't, credit partner, and there's a few situations to many of that. So give me one more second to make sure I covered this. Okay, that'll be everything from me. I greatly appreciate you and your energy and your time. I know it is very important, as is mine, excuse me. And I do never want to waste any of it. Every word I bring up and thought, for me, at least, it's very well calculated. And so it's towards my efficiency. It's for us to be the most efficient that we can be in this. So all this information I'll leave for you down below in the description in time when it is there. Fill out this questionnaire if you haven't, and if you have, I'll get back to you. And if I already have, you'll know that. And for all of the information, I'll leave more information in the description. If you got value out of this video, please give it a thumbs up. Share it with others who you feel will get value out of it. It can be a complete stranger, a friend, or a family member. And just know at the end of the day, there are grant alternatives out there while you're waiting, or they're just too much, just takes forever, and it's just not going to work for you. This is the way to go about it, and going through the diagnosis, not the symptoms. What's the actual cause, the root of it? Go through the root of the cause, the root of the tree, the very bottom, the soil, the roots inside of it. Look at that for what it is and make the changes that you need to make while you can change them before it's too late in the next market. Now you're suffering, and the same people I spoke to this year, next year, are in the same position. While I tried helping them, they couldn't do it themselves, or they couldn't help themselves enough. But there's just so many things that came up, and that you have to look at and say, what could I have done? I could have done this. I made an excuse for this. I didn't want to change. But I want to continue to ask this guy of the world when I try to look at every possible scenario, but you're not helping either by doing what you're supposed to do, or you don't have enough of this. And so it can make it hard in some cases to really mitigate those risks. And I understand that if you're over leveraged, you don't have enough, but you have to look at what you currently have. What can you do to invest more into something else and build up from there? And if you haven't subscribed, please go ahead and do so, and click that bell notification icon so you do not miss any future content I'll be coming out with. That's all for now. Take care. Bye.